Hi there. Welcome to Market Insights. I'm Brian Christopher. Thanks for joining us today. Today, I'm joined by my friend and colleague, the editor of Automatic Fortunes and Crypto Profit Trader. It's Ian King. Ian, how are you?
I'm doing well, Brian. Just kind of amazed that the market seems to relentlessly go up every day, especially these large cap tech stocks. How are you?
Oh, I'm doing great. I'm doing great. We need everybody to click and subscribe to our YouTube channel here. You know, click the bell so you can get some alerts to get future notices. And also, probably most importantly, leave a comment. Let us know what you're thinking. Let us know what we can talk about. We read them all, and we will comment in a future video if it makes sense and works out. But Ian, the first thing I want to talk about, as you mentioned, this market, right? So the S&P 500 closed above 3,400 for the first time ever on Monday, and now it's, I mean, as we record this, it's almost to 3,500, and it's showing no sign of stopping. So one thing that we did in our poll question from last week was we asked people what company they thought would be the first to reach a market cap of 5 trillion. And I mean, if you think about it, we've got Apple at 2 trillion already. The top winner in that was Amazon at 30%. We had Apple around 27. And the one that I think surprised me most mathematically was Tesla, which still came in above a quarter of the votes at about 26%. I mean, its market cap today is, we're looking at about 400 billion, so a fifth of Apple. Did this surprise you, Ian?
I mean, if you think Tesla's going to be a $5 trillion company, that's got to go over 10x from now. So you're looking at a $20,000 stock price. They do have the stock split coming up, and I'm sure if the stock keeps going up, you'll see more of that in the future. But what the readers are really focused on is this future of mobility. With self-driving cars and self-driving trucks, this is a $7 trillion global industry, and I'm talking about the transportation industry. So that's everything from cars to taxis to trucks to even personal aircraft, which we might see sometime down the road. And this is just up for grabs. Whichever company comes up with the first self-driving vehicle and commercialize it is going to eat a huge share of this mobility market in the future. And I think our readers are really cognizant of that. And I think that's a good thing. How about you?
I think it's amazing. I also think that it's very interesting because the pace of this movement has been quite quick recently. I understand you have some data on that you could share with us.
Yeah, people buy into the stock and the idea and the narrative before the reality happens, right? So if you're buying Tesla today, you're not focused on where earnings are currently in this year. They're only going to come in about $5-6 a share. But this is a company that by 2025 could be earning $80 a share. Now, at the price earnings multiple, even though at 2000, it still kind of looks expensive. You're paying something like 40 times growth for 2023 earnings. But that's kind of in line with where the rest of the tech stocks are trading. Look at Apple. Amazon's a different category of its own, but look at Apple, Google, Facebook. They all kind of have that 40 to 50 price multiple. One thing I want to note, which you mentioned, is if you take a look at Tesla's chart, and we're going to pull this up right now, this is a weekly chart of Tesla, and you'll notice that when Tesla starts to move, it just goes up 20 to 40% in a very short period of time. And companies like this or stocks like this are very, very difficult to trade because the weeks that it doesn't go up, it also goes down 20 to 30%. And this shakes people out. So you either have to be fully bought in on the Tesla narrative, the idea that electric vehicles are going to replace the internal combustion engine in the very near future, and that they also are going to play a big part in self-driving. And for those of you that had bought in early in this and have stayed into it, congratulations. I mean, this has been the best performing tech stock that I can, outside of Overstock, the best performing tech stock that I can think about in the last couple of years.
And you certainly had a large group of short sellers that has been at a minimum reduced right now with the price movement that we've seen.
Yeah, no, I saw that that Tesla might have $20 billion worth of shorts bet against it right now. And this is just more kindling for the fire. Brian, I gotta tell you a funny story. I was in New Orleans maybe a decade ago, and I saw this shirt. It was a T-shirt and had a pirate on it. And it said, "The beatings will continue until morale improves." And when I think of that saying, I think of people who short Tesla, because this is just one of those stocks that you just got to get out of the way. It's a widowmaker trade, which means that if you continue doing this, you're going to lose a lot more than, everything. This is what they used to say about Japanese government bonds back in the day, shorting them when their interest rates were below 1%. But basically, anyone who has shorted the stock since 300 or 400 has just gotten their whatever handed to them. And it's one of those trades that, sure, it might make sense. Tesla is way overvalued, but don't be too smart. Don't think you can outsmart the market on this. The stock is going up. There are people who are cult-like who are buying it on every dip. And you see that if there's an opportunity to get in, people buy more of it. And this is just something you just don't want to short. I mean, there might be a time when Tesla finally falls and perhaps people start worrying about the valuation, or maybe they miss a quarter in earnings. But right now, I mean, it's a car company with 25% profit margins. It's basically like a piece of software on wheels. And you want to get out of the way of this. I would want to know one more thing. I read a bear case by a guy named Doug Cass, who writes for TheStreet.com. I respect him very much. I've been reading his stuff for the last 20 years. But his bear case for Tesla was that competition is coming. Brian, I have been following this story now for a decade. And I've also bet against Tesla myself by buying one of their competitors. And there is no competition for Tesla. Their cars are $10,000 to $15,000 cheaper than any other model out there that thinks it can be a competitor. I mean, I'm talking about like the Audi e-tron and the Jaguar I-Pace, both cars that we thought were going to be Model X killers. These are in the SUV category. And they've sold maybe 1,000 of these vehicles since they debuted a year or so ago. So there's just no competition for Tesla right now. And if you're thinking about buying an electric vehicle and you go out and you test drive a bunch of them, you're driving home a Tesla. You're not going to buy one of these, new Fords. And you're not buying a Chevy Bolt unless, you want to not buy the Model 3, which is $10,000 more. So I just see it. It's a very hard case to short Tesla at this point. And I apologize for that long soliloquy.
Oh, no, it's great. And I mean, in general, we saw this kind of activity in the late 90s as well. It's 20 some years ago, right? We don't necessarily remember, but we were saying the same thing about .com stocks. Basically all of which didn't have the substance that Tesla has with earnings and revenue growth and all these other kind of things. So
yeah, but back then, what was the Nasdaq's PE in 2000? It was like 80 to 90, right? And where the Nasdaq PE right now is maybe 25 to 35. So I don't think we're that bubbly yet.
No, we're not. We're not quite there. But also, so with respect to this market, right? So we have this S&P 500. It's over 3,400. Now we're talking about large cap stocks there. Those are the biggest of the big stocks that have reached that level and are still moving higher. So I would think it may seem crazy for our listeners to think that there might be a group of stocks that's actually outperforming them right now.
Yeah, I mean, look at the Russell. The small cap stocks are gaining on the SPX or the S&P 500. And we do have a chart to show them. Would you like to introduce the chart, Brian?
We're actually going to have two charts, one of which is, like a 30-year period that if you zoom in real quick and you look at this chart here, you can see that there's a little bit of a blip at the end on the right-hand side, right? And that is really what we're referring to, which is these small caps that are beginning to outperform. And then we have another version here. If you check this out, this is just year to date, and it shows a nice little uptrend with respect to our smaller stocks versus the S&P 500. It's been something that people probably wouldn't expect when they read the news every day and read only about Amazon and the big dogs.
Yeah, I mean, what do you make of that? Why do you think that small cap is suddenly outperforming big cap?
I think that we have this with every sector, that when you have stocks that are going up, that's not limited to the biggest names in that arena. And so as we have, largely a market that's going up, if we zoom in and we try to find the best names in that industry, or the ones that are just benefiting from whatever the tailwinds are that we're seeing, in general, the small caps are going to perform better because they have more space to move. They basically have more upside from where they're starting, more relative upside.
I mean, they also really got punished. I mean, the IWM, the Russell 2000, got hit a lot harder during coronavirus. One of the reasons for that is small caps typically don't have as much cash on their balance sheets. And so when you think of a wave of potential bankruptcies coming, if the economic cycle rolls over, it's the small cap companies that get hit the hardest. But that's also where the opportunity lies when economic growth comes back. So, if we see a third and fourth quarter pickup in the economy, and also if it looks like 2021 is going to be a big year, I think that small cap will really outperform the large cap sector.
Yeah, I've seen some statistics recently that talk about the zombie companies, right? Which are companies with lesser interest coverage than maybe less than one-time interest coverage, and I have to confirm that number, but the thing is, there is a higher percentage that are small caps, and they just generate less money. But in a world of relatively easy credit, that can become less of an issue. You can't operate that way for years, but in the interim, with stimulus, it can be a way to get out. And as you say, when you've sold off initially, that jump higher can literally be multiples of your current price.
Yeah, and the Fed said today they're going to keep interest rates at 0 for the next 5 years. So, I mean, who can predict the next 5 years? We could have runaway inflation next year. It's hard for the Fed to really say that, but their intention is just to prepare people for the fact that they're just going to keep rates lower for longer. But, I was thinking about another point. A lot of times when you have a large cap rally like this, and especially if it's in a specific sector. So, you've seen Tesla rallies, and then you have all these smaller car companies. And we pointed out Nikola is one of them, and some of these other SPACs that I'd rather not mention right now because I don't want anybody to go and buy them. But some of these smaller electric vehicle producers, which are small cap companies, start running up as well, because investors who have made sizable profits in Tesla say, okay, what's the next electric vehicle company I can invest in? And it just so happens to be, this smaller cap startup type company that hasn't run up like Tesla yet. So I think there's a degree of that going on in the markets right now. And especially if you look everything from, not just electric cars, but also cloud stocks. So cloud computing stocks, the largest one, Salesforce.com, for instance, and then there's also smaller cap competitors that people are now investing in after the larger cap stocks make the run, if you know what I mean.
Mm-hmm, mm-hmm. That's exactly right. And I think actually a good place to leave it. Thank you for joining me today, Ian.
Always great to see you, Brian.
Also, you guys, we mentioned the poll question today, where we got this great information on your thoughts on the greatest growing stocks. Don't forget to check that out and fill it out again this time, so we can use that information for a future topic. Also, those of you who are in the path of Laura and the other hurricane that's coming, we're thinking about you. Everybody in Louisiana and Mississippi and Texas and really anywhere affected. Ian and I both live in Florida. We empathize with you immensely. We want you to be well, and please be safe. So thank you. That's it for today, and we'll see you next week.